let's get going. Again, I want to thank you for coming out today. I appreciate it. Again, if you have any questions, please type them in. We'll try to answer those for you in the chat. Um, and one of the things I like for a start of going here, we're going to talk about a couple of cities. We're going to talk about Garden City and we're going to talk about Chelsea. We're also going to talk about the forbearance and how that could be affecting the real estate market here in the next little bit. And we're also going to talk about mortgage rates and how that can affect your buying power. So, with that in mind, first of all, again, I'm Bruce Webb with the Bruce Webb team of realtors. We're here with Preferred Realtors in Plymouth. Been doing this for about 30 years now, and it's a great opportunity, both buyers and sellers out there to get into the real estate game. So, with that said, Garden City, again, like a lot of communities out there right now, Garden City is seeing a very low inventory. To give you an example, inventory sales right now, or homes on the market, is down about 42%. Last year there was 43 homes on the market, and this year we have 25 homes on the market. What's important about that is the monthly ratio or absorbent rate. Okay, a year ago it was 1.1 months worth of inventory on the market, and this year we have about 0.6. And again, where we're looking at that is to have a balanced market, and somewhere around 4 to 6 months of inventory on the market is pretty balanced. Anything below that is typically considered a seller's market. Anything above 6 months is a buyer's market. Okay, and then when we're between the 4 and 6 is a balanced market. What the reason for that is, we have approximately, as I said, 25 homes on the market in Garden City right now. It would take us about 17, 16 days to go through that market that's there without putting anything new on the market. It would only take us about 17 days to absorb those properties on the market at the rate that we're going right now. Last year we had about a average sale price about 125. This year we have about 156. So that's gone up about 24%. Again, this is a great opportunity for sellers to get in and talk about their equity in their home and make that purchase. Over the 2-month period, we're talking about January and February, because this is a March report, and that's what real comp, that's why I'm taking off as a real comp, is about a month behind in getting the information out, but it still will give us an idea where we're going. So January and February, there was an increase of about 22% from the year from last year. So that's pretty typical what's going on. I talked briefly that we're going to talk about forbearance. A year ago, when the pandemic hit, banks had to start working with their homeowners because they're, they've lost jobs, or they've had their hours cut, or there's a lot of different reasons why. With the pandemic that was started up here about a year ago, there was a lot of reasons why homeowners couldn't make their monthly payments. So the banks had to step in and start working with them, knowing that it was hopefully a short period of time where they would get their jobs back and start working again, and then they could start making payments. Well, it's been a little bit, it's been about a year now that we've started up, and so the banks have really started to work with their people, and I think it was 2.3 million people had filed for a forbearance of some sort with their lender. Okay, and that's a lot of homes out there that people are thinking, hey, there's a foreclosure, there could be a foreclosure, very similar to back in 2006 and 2008 that we had, but there's 4 basic reasons why that's not going to happen. Mostly, about 50% of the people who filed for the forbearance are already out of that program. And when I say that, 26% made their monthly payments all the way through the program. So they really they filed for it, but they really didn't have to use the forbearance programs that that their lenders provided. And then about 14, almost 15% in the past have already brought their mortgages up to a current payment rate, and then about 7.5% of them have actually paid off their loans. So that's just that about 50% of them have already corrected that issue. Now banks, they really don't want to go through a foreclosure process like they did again back in 2006, 2008. It's a lot of employees that they have to hire on. It's a pain in the neck for them to do. And they've learned from the crash back in 2008 that the lending institutions they basically don't want the headache that it's there. And as I said, about 50% of them already have taken care of, and then there's a lot of them that they've already worked out certain programs for. For example, 35% of them have worked out a repayment plan with their lender, and about 26% have gained a loan deferral with their borrower, and 9% have given a loan modification. So banks are really working with their customer and trying to make sure that they don't lose their homes and go into foreclosures. Then the third is there's no real political will to close on properties, so the government is in the process. They started here a few weeks ago, putting in policies that to have the banks and lenders work with their customers, and what they've done is the CFPB, which is the Consumer Financial Protection Bureau, okay, could actually have the mortgage companies pay a fine or a fee for not working with their customers. So mortgage companies could face penalties if they don't take steps to prevent a deluge of foreclosures that threaten to hit the housing market later this year. The U.S. regulator said the Consumer Financial Protection Bureau, the CFPB, warning is tied to forbearance relief that allows millions of borrowers to delay their mortgage payments due to the pandemic. Mortgage servicers should start reaching out to affected homeowners now to advise them on ways they can modify their loans. Okay, so there's about 4 ways that this guideline is set forth. Now, this is a guideline that they're in process of putting in place. The proposal would rule that special pre-foreclosure review period would generally prohibit servicers to start foreclosure until after December 31st, 2021. So they're saying don't start foreclosure procedures until after the end of this year. The proposal rule would permit servicers to offer certain streamlined loan modification options to borrowers with COVID-19 related hardships based on evaluation of application. Okay, and the proposal rule wants temporary changes to certain required servicer communications to make sure borrowers receive key information about their options at appropriate time. So these are proposed right now, but the government is trying to put these in place so we don't have a mass of homes hitting the market at this time. Okay, so that's what the government's trying to do. And then on the fourth is right now the way homes have increased in price, there is a good chance that there's a equity in the home right now. So even if the homeowner had to sell their home, they wouldn't have to foreclose on it because there's equity in there. There would be enough money in there to do a normal real estate transaction, and they could still walk away with a good chunk of change and so they wouldn't have to go into a bankruptcy or foreclosures that way. So that's a opportunity for them. So that's the four that's out there right now. But the bottom line is, no one really wants to get into the foreclosure market again. Either the real estate agents don't want to do it, the banks don't want to do it, the government doesn't want to do it, and obviously the homeowner doesn't want to do it. So we're working through that whole process right now. So the next community that we wanted to talk about today was Chelsea. Okay, this is a little community just west of Ann Arbor, and like a lot of communities, actually this one is in pretty decent shape right now, because the inventory out there is only went down about 6% from last year, and they're looking at it about a 2.8 absorption rate, so which is a lot higher than some of the communities around Plymouth, Canton, say up and down the 275 corridor. But the prices have gone skyrocketed out there too. So they've averaged in 2020 was to 260,000, and now they're averaging about 442,000. So they have jumped up almost 70% as the average price out there. So again, though, over the 2-month period, they went from a 270 price rate up to 290, 292. So March was a very good a month over there, that they had a lot of high-priced homes that have gone on the market. So that's Chelsea, and again, we work up and down the 275 and the 23 corridors a lot. And what I wanted to talk about next was the change in mortgage rates. As I said, the mortgage rates have ticked up just a little bit. They were a little bit below 3% here a little while ago, and now they're a little bit above 3%. So let's give you an idea of what happens with the mortgage rate and the buying power. Most people have a comfort zone where they want to keep their monthly payment in. So say if you want to keep your monthly payment between $1,200 and say $1,250 per month, okay? And a little while ago we had a say a 2.75 interest rate. Now we're only talking about the interest rate and the principal. We're not going to add in the taxes and insurance on this example because that's going to vary with the community, and but this is just for the principal and interest on a mortgage rate. So if you're trying to keep your monthly payment on your mortgage between $1,200 and $1,250, and you had a interest rate of 2.75, you could actually afford a $300,000 mortgage, okay? And at that time, you would have a $1,225 monthly payment on your principal and interest. Now, if you just take that up a 0.5% to 3.25, your monthly payment would be $1,240, but your mortgage, what you could afford, would be $285,000, $15,000 less than if you had a 2.75 mortgage rate. Now let's just take that up another 0.5% up to 3.75. Okay, you still stay in your $1,250 monthly payment. Okay, it would be $1,250, but your buying power is now down to $270, $1,000 for your mortgage that you could afford. So 1% changes your buying power from $300,000 down to $270,000. So that's what's starting to happen right now, is that interest rate is going up, and as it goes up, your buying power is starting to drop down. So you still have that, you know, especially if you want to keep your monthly payment in that range between $1,200 and $1,250. That's what type of payments you're going to be. So I wanted to at least give you that, because it's important for our buyers to understand, as the interest rates move up and down, your buying power goes up and down. So I want to let you know about that. Okay, My ask for the week. Okay, last week we talked about ranches. We still have a lot of buyers out there that are looking for ranches, but this week we're going to talk about condos a little bit. I have five buyers who are looking for condos. Two of them are in Canton, and they're looking for $150,000 or lower, or $180,000 or lower in Canton condos. We have another buyer out in South Lyon who's looking for a condo under 150. And Westland, we have a condo, buyers looking for a condo for $80,000 or less. And in Livonia, we have one that's looking for a condo that's $175,000 or less. Now, there are a couple special properties that I'm looking for too for single families. I'm looking for a lakefront property. This hopefully would be out in a chain of lakes, but it could be other areas. We're looking to try and keep about a 45-minute drive into the Plymouth-Canton area, and we're looking for under $500,000. But we would like to be right on the lake, preferably like a sandy beach or something like that, but it'd be probably all sports type of lake. And we also have a couple of buyers that are still looking for 4-bedroom homes in the Canton Pinckney area, and we're looking at between $300,000 and $400,000 for them. So we have a lot of great buyers out there that are pre-qualified, ready to rock and roll. If you know of someone who is thinking about selling, please have them contact me. We can work out special rates for them. We can also work out some, make sure that they get into a home before we actually close on theirs. So it's a great opportunity right now for our sellers. So if you have any questions, please give us a call. I'm Bruce Webb with the Bruce Webb team of Realtors. I hope you have a great Michigan day, and let's talk soon. Bye now.